Hello everyone and welcome back to another video. All right, let's talk about what's actually happening in markets today, February 13th, because there's a lot of mixed sentiment right now. Bitcoin is still defensive. So Bitcoin is hovering around the 66K range, struggling to break back above major resistance near 70K. According to the block, Bitcoin remains defensive below 70K with shallow demand limiting upside. And the Economic Times reported that Bitcoin is steady near 66K amid a broader risk-off sentiment, with altcoins like Ethereum and XRP still under pressure. So even though we're not crashing aggressively today, we're not seeing strong bullish momentum either. Here's where it gets interesting. Bloomberg reported today that Coinbase shares jumped sharply around 17 to 18% as dip buyers stepped in, betting the crypto market may be near a bottom. However, MarketWatch also reported that Coinbase swung to a surprise quarterly loss amid the broader crypto exodus. So what does that tell us? It tells us traders are speculating on a bottom, but fundamentals are still showing stress in parts of the industry. That's not full-blown bullish confirmation. That's cautious dip buying. Crypto also saw some lift after a softer than expected U.S. inflation report. The Defiant covered how markets reacted positively to the inflation data, giving crypto a short-term bounce. But according to CoinDesk's Crypto Daybook Americas, investors are still looking for the exit ramp, meaning sentiment is fragile. Good news isn't creating explosive upside, it's creating relief rallies. Now, this is important. A report covered by the Business Insider from Bybit and Blockskulls shows crypto derivatives markets are at their most extreme positioning levels since the 2022 FTX collapse. Extreme positioning typically means one thing: volatility is coming. Whether that's a squeeze up or another flush down depends on liquidity and macro conditions. This isn't just crypto. Reuters reported that global markets are seeing risk assets weaken as investors move toward safer positions like treasuries and the US dollar. And when stocks wobble, crypto usually follows, because crypto is now heavily correlated with broader liquidity conditions. Now, here's the structural side most people miss, and we talked about this yesterday. Bloomberg recently highlighted that despite crypto's $2 trillion crash from peak valuations, optimism in Hong Kong hasn't faded. Hong Kong regulators and institutions are still pushing forward with digital assets infrastructure and positioning themselves as a global crypto hub. That's the difference between short-term price action and long-term structural adoption. Here's what's actually driving markets today. Bitcoin stuck below key resistance, risk-off sentiment across stocks and crypto, extreme derivatives positioning, mixed earnings from crypto firms, soft inflation offering temporary relief, long-term institutional optimism still building globally. This is not panic mode, this is positioning mode. If you want to understand how to navigate markets like this, not emotionally, but strategically, message me. My platform connects people to real education across crypto, stocks, futures, and precious metals, because markets move whether you're ready or not, and I'd rather you understand what's happening than just react to it. Thank you guys so much for watching. I love you guys so much, and I'll see you in the next one. Bye!